So what should you be doing in terms of strategy for the markets? Ambareesh Baliga, Managing Partner for Global Wealth Management at Edelweiss Financial Services, is joining in this morning. Ambareesh, it's been a pretty tough last couple of sessions that we saw. I remember last time we spoke to you, we were hovering those all-time high levels. We've corrected a little bit from there. What are you advising clients right now? Is this just some profit taking that's coming in right now, or are we seeing some kind of pressure that's actually building up in the markets? How are you viewing it?
I think it is more of profit taking, because we had an extremely good move from those 5,200 levels to close to 6,300 after a 1,200 sort of a move, a 1,200 point sort of a move. I think a 300 point correction is a healthy one. And in fact, I don't see the markets really going below 6,000, 6,050 levels currently where they are. And I think this is a good buying opportunity for those who had missed out on the earlier rally.
Ambareesh, in that sense then, which would be few of the sectors that are on your radar? We'll discuss specific stocks and rationale later, but just the top few sectors on your radar at this point of time.
No, sectors which are on the radar currently are capital goods, banks and like metals, which we have seen doing decently well in the last couple of weeks. And banks, after the sort of a major correction which we have seen in the last like 3 to 4 months, we saw a very good bounce back in the last approximately 3 weeks. Post that, there has been a mild correction. I think this should be utilized to buy into banks.
So you think there is some more rally coming in as far as the banking stocks are concerned?
Absolutely. I think if you're looking at the private sector banks, I think that is the one which should rally the most, followed by a few names in the PSU space, because the results of, quite a few of them which have come lately haven't been good. But some of the PSU banks also should start rallying.
All right, Ambareesh, hold on to that thought. We're just counting it down to the market opening. Quite a few stocks on focus, but on an overall basis, we'll have to wait and watch whether we can break this 5-day losing streak that we've had, Priyank.
Definitely, as Ambareesh was mentioning out there, the metal stocks, keep an eye on Hindalco today. You already got some commentary coming in from Novelis, is what we saw early this morning. Hindalco itself will be reporting numbers today as well. And Tata Steel also, which is lined up this week, has been on fire the last couple of trades. So let's see as to how those two stocks pan out from the metal segment. Apart from that, the index is open a little bit on the higher side today. 27, 28 points, 40 points higher is what the opening moves are coming in on the benchmark indexes at least. ITC and HUL showing some good strength, at least on the opening trade. ONGC, Reliance Industries, almost 0.5% gains coming in there. Pull up Hindalco, that one's trading up almost 1% on opening is what we've seen as far as that count is concerned. Cipla, Dr. Reddy, Sun Pharma, all positive. A couple of the IT majors like Wipro and TCS holding on pretty well. To increase on a little bit of a negative side, let's see that one catches up to the other peers as well. L&T up around about 0.5%. M&M's trading positive. Bharti's trading up by around about 0.7% as well is what we're tracking. So all in all, still holding on to gains around about 50 odd points on the benchmark index, but HUL slipped into negative there. Tata Motors continues that weakness that it's seen over the last session or so. 1.7% cut today as well. SBI is trading a little bit on the weaker side. ICICI Bank down. You have Bajaj Auto that slipped into negative. Coal India is down 0.3% as well is what we're tracking. Sesa Sterlite down almost 1% now in terms of the opening cues that we're picking up in terms of a stock specific basis. One thing's pretty evident, Tata Motors seems to be the weakest counter as far as the Sensex is concerned. A 2.2% cut coming in on that particular stock right now. Let's pull out the Nifty for you. Get a mention on that index as well as to what kind of cues we're picking up there. The Nifty itself trading higher by around about 16 to 17 points. 39 stocks gaining, 10 odd stocks losing out, just 1 odd stock trading on the flat side. Alright, let's see as to which are some of the names that are on the moves there. Run you through that as well. Ranbaxy is up around about 1.5%. Hindalco on the back of the commentary coming in from Novelis and also the expectations for Hindalco itself up around about 1.3%. M&M, Kotak Mahindra Bank and HCL Tech are a couple of top performers so far. But in terms of losers, Tata Motors taking that knock 2.2% lower. Sesa Sterlite, JSPL, you have SBI and ICICI Bank that have been a little bit on the weaker side as far as the opening cues are concerned. So let's see as to what kind of movement we pick up on a couple of these counters from here. But those are some of the other stocks that are on the radar right now. Tanvi, 6093. Once again, it's a little bit of a slow start, but some relief coming in for the simple reason you're up almost 14 to 15 points on the benchmark index.
Indeed, at least we're in the positive territory, and the mid-cap seem to be doing relatively better. 0.5% of gain coming for the mid-cap index. And take a look at Britannia Industries. A good set of numbers, profits really zooming ahead. Even their margins seem to have done pretty well. And the stock is up by 7% at this point of time. That's not the only FMCG stock. Let's also take a look at what Godrej Consumer is up to at this point of time, and even Godrej Industries. Both of those stocks are in limelight because of their earnings. GCPL right now is showing some pressure, but Godrej Industries is up by 2% again. Apart from that, some of the other stocks in focus work hard on the back of the fact that they're looking at listing one of their subsidiaries in Europe, and the stock is zooming ahead, up by 3% in trade on the back of that news. Apollo Tyres came out with its numbers. There were a good set of numbers, beating street estimates there, and the stock is up by almost 2% at this point of time. So those are the few stocks that are currently rallying as far as the mid-cap index itself is concerned. Ambareesh, what are your thoughts when it comes to some of these mid-size FMCG companies? Most of them seem to be doing pretty well in terms of business also, and Britannia specifically seems to become a hot favorite amongst many market experts.
Absolutely, I think Britannia, Dabur, in fact, that also came out with good numbers. So clearly, there is interest in this space. And again, if you are looking at the numbers of Asian Paints, which have been much better than what the street was expecting, so it's quite natural that when results are better than expected, you clearly have that interest moving into that space and in those specific companies.
That's the FMCG pack. Clearly, earnings reaction coming in there. Since we're talking about the earnings impact, Tata Motors has been somewhat of a surprising move there, Ambareesh, in terms of the way numbers actually panned out. Good performance coming in, bottom line seeing a huge jump. But the stock yesterday and today has been a little bit on the weaker side. Is this a case of that already being priced in and some profit taking coming in now? Well, how do you see Tata Motors from here?
In fact, we saw extremely good move in Tata Motors in the past couple of weeks before the results, and although the results were excellent, I think people are wondering whether the margins can be maintained going ahead. We believe that the margins would be maintained for JLR going ahead, and with the new launches which should be happening over the next 12 to 15 months, I think there would be interest in this stock going ahead. So in fact, this correction which which we saw yesterday and which we are seeing today, I think should be utilized to buy at lower levels.
So then we're talking about a couple of moves similar to that is Tata Steel as well. The stock shot up almost 80-85% from somewhere in the start of August itself. It's been having a dream run for that particular counter. Numbers are expected later this week. Do you see somewhat of a similar situation, because most of that optimism in terms of how the numbers could actually pan out seems to be somewhat priced in the way the stocks has actually run up? Would you agree to that?
It is possible, surely, to a certain extent, but then what we believe is that Tata Steel could actually surprise majorly on the upside as far as the results are concerned. So I think even at these levels, one should hold on, and possibly in case there is a surprise on the results, I think one should actually buy. After the announcement of the results.
Since you're talking about metals, Ambareesh, Hindalco comes out with its numbers today. Sale wasn't that great. What is the outlook here, and what should one be watching out for in terms of Hindalco's stock movement also?
No, Hindalco also I think should come out with decent results. Sale, unfortunately was a negative surprise, no doubt. But then we clearly see the steel cycle and the aluminum cycle turning around. So I think, both these stocks, Hindalco and Tata Steel, are in fact buy for us.
Ambareesh, I want to touch upon the the L&T stock itself, because the last couple of days you've seen some kind of cooling off coming in there, but today once again the stock's got a little active. Just pull up the 1 month and the 3 month charts for you as far as L&T is concerned. I'll come back to you with the outlook there. Just to quickly address the price performance first. 1 month stock's up around about 8.6, 8.7%. On a 3 month basis, the stock's almost up 20-odd%. Ambareesh, what's the outlook on L&T? Because a lot of interest is there as far as the FI community is concerned when we talk about L&T. What are you advising clients on this one?
In fact, we've been having a buy on L&T for quite a while, and if you're looking at the capital goods space, there are hardly any other stocks to look at. BHEL was on the buy list earlier, but then the sort of pathetic performance which we've seen from that company over the last couple of quarters, it's completely off our list. So I think the only company to be looked at to buy is L&T. Although we have seen an extremely good move in the last 3 months, about 20%, like what you said, I think it's taking a breather at these levels, but surely over the next 12 to 15 months, we clearly see this stock going to those levels of about 1225, 1250.
Ambareesh, we're pretty much through most of the earnings season now. Any new stocks or companies that have come onto your radar after their earnings performance?
In fact, we have started looking at auto ancillaries and stocks like Bharat Forge and Motherson Sumi, in fact, have become our top picks in that space because both of them, we expect them to continue with the sort of a performance which they have shown in the recent past and especially the last quarter. I mean, a stock like Motherson Sumi, we continue seeing around 45-50% CAGR over the next 3 years. So even at these levels, we would suggest that you should buy Motherson Sumi and Bharat Forge.
You know, the last 15 to 20 minutes, Ambareesh, we've been discussing, there's not been a single mention of the IT stocks, and surprising, considering that's really been the outperformance this year. Is that now off the radar as far as the IT stocks are concerned, Ambareesh? What's your advice there?
It can't be off the radar because finally it's one of the largest market capitalization sectors. But then surely when you have the other sectors performing, you will see that IT, pharma and to a certain extent FMCG could underperform. I'm not saying that they'll correct from here, but then the performance could be lower as compared to the other sectors which were actually beaten down. So you'll see much better performance from cap goods, banks and metals, like what I was saying earlier, as compared to IT, pharma and FMCG.
Let me just hold that. I just want to address the Peninsula Land numbers that are flashing on the screen as well. You got the bottom line coming at around about 29.6 crores versus around about 82.7. Net sales also have actually come down to a certain extent. The stocks holding on to gains of 1 to 0.2%. Just try and wait and see as to how the reaction comes in because the numbers just coming out right now. You got net profit significantly low. I think those are it's a year-on-year comparison that we've got for you there. 29.6 versus 82.7. Net sales at around 107 versus 287 crores is where Peninsula Land's numbers have actually panned out right now. We'll try and wait and get some more details in terms of margins as well as the land bank for you. But that's what's happening as far as Peninsula Land quarterly performance is concerned. Ambareesh, just shifting focus to the oil and gas pack as well. You got some kind of a mixed queue coming in the last couple of days. You got some pressure building in stocks like ONGC, specifically Reliance Industries also has been a little bit on the weaker side. What's the call when we talk about the frontline counters here, and if any view on the OMC pack as well?
Reliance Industries, again, we have been positive on that stock for quite a while, and in fact, we see the refining margins and the petchem margins improving. Petchem margins, anyway, we have seen that improving in the last 2 quarters. And going ahead with the gas pricing issue also more or less getting sorted out, I think Reliance Industries clearly is a buy at the current levels. In fact, we have a price target of about 11.25 for that stock over the next close to 9 to 12 months. OMCs, again, we have been positive. In fact, I had recommended HPCL at levels of about 175, 180. Even at these levels, we continue to be buyers in that stock because clearly the way crude oil prices are moving, in fact, we expect that to touch possibly $90 over the next possibly 3 or 4 months, which again should be positive for OMCs. So at the current levels, since we have seen a small correction from that 227, 230 levels which HPCL had reached, I think at the current levels it's still a buy.
All right, Ambareesh, then as we wind down the conversation, any topics that you're working with right now for the mid-cap space? I know Tanvi asked you regarding the FMCG pack in the mid-cap space, but apart from that, in the broader markets, anything that's looking attractive as a value buy right now?
In fact, we are looking at in the pharma space, among the smaller ones, Dishman Pharma. I mean, after this scare which we saw in the March and June quarters, in September quarter, we have actually seen again a turnaround for that stock. It's back on track. So I think Dishman Pharma at the current levels is a buy. We have a price target of about 110, 115 for that stock. Among the smaller private sector banks, I think because of the possible takeover from the foreign banks, which RBI policy has come out in the recent past, I think one should look at stocks like Karnataka Bank, DCB, City Union and Federal Bank.
All right, fair enough, Ambareesh. We'll leave it there. Thanks so much for joining in this morning and getting us your perspective as far as markets are concerned, what the outlook looks like. Lots of you coming in from Edelweiss out there as to how they're positioned in the market. But it's interesting, market's still holding on to gains of around about 0.3%.